Hi, thanks so much for joining in. You're watching the Mutual Fund Show on NDTV Profit, and my name is Alex Matthew. Like the name suggests, the show gets you actionable insight on everything mutual fund related. To that end, we're speaking about a new fund that is on offer. It is in the multi-cap category. It's a category that a lot of people are finding interesting, particularly because they've done incredibly well over the last couple of years or so. Vinay Paharia, who is the Chief Investment Officer at PGIM India Mutual Fund, is joining me to talk about the new fund that they are launching in this category. Vinay, thanks so much for taking the time. Pleasure having you on the program. Let's talk about what's on offer and why you chose to launch the multi-cap fund right now.
Sure. So, Alex, thank you for having me on the show. So the category is very straightforward. It is a category which, as the name suggests, invests in all capitalizations of the market, which means it invests in large cap, mid cap, and small cap. And the good thing about this category is that there is a base minimum requirement of investing at least 25% in each of the categories, and that ensures that at any point of time, the fund managers do not have an excessive exposure to only one category. Like, for example, if you look at the flexi-cap category, almost 2/3 of the category is invested predominantly in large cap and just about 1/3 in mid cap and small cap. Whereas in this, there is a base minimum requirement of 25% exposure to each of the categories. So I think from a long range perspective, this provides an investor with a very good blend of all the three capitalizations, which ultimately results in a very good blend of potential risk and reward payoff, because small caps and mid caps have a much higher level of reward potential along with underlying risk, whereas large caps act as stabilizing forces. So I think that's what's unique about the category. In terms of PGIM, I think one of the ways in this fund is different from the rest of the multi-cap funds is that PGIM follows an investment philosophy of predominantly investing in companies which are high growth and high quality.
I want to get to that. Vinay, allow me to interrupt, because I want to specifically talk about your philosophy in a bit. But before we do, a couple of aspects that I want to drill into, which is, what is the likely size of the portfolio that you will have? What is the investable universe? Understandably, obviously, you're going to buy across the market because you have to, but you will have certain filters. Before we get into the investment philosophy, I think it will lead very nicely into that. What is the investing universe, and what is the ideal size of the portfolio that you will have?
Sure. So the overall investing universe, as you rightly said, Alex, is pretty large because we will invest across the capitalization. As we speak, there are more than 1,200 companies which have more than 1,000 crores of market cap. So that is our investing universe, so to speak. And from these 1,200 companies, we then select companies which have got higher than average growth and higher than average quality on a future basis, on a prospective basis. So I think that's how the overall universe looks like. In terms of portfolio, number of stocks in the portfolio, it would vary somewhere between 60 to 75, depending on the fund manager's ability and view on the market.
Okay, that's and I was reading in your presentation that 160 to 200 stocks would basically be the drilled down universe. Is that accurate?
That's perfect.
Okay, so let's talk about the growth at reasonable price strategy, which, as I understand, the fund house espouses, and what you're going to be trying to do on this scheme as well. Is that possible at this juncture, Vinay, considering the kind of run-up that we've seen across the board, particularly in some pockets? One would say that there is a little bit of stretched valuations.
That's a good question, Alex, and very paradoxically, it is the only strategy which is significantly underperforming in the last 1.5 years. So while we would have imagined that in such a runaway bull market, high growth companies and high quality companies would be available at material premium valuations. I think thankfully that's not the case. This strategy has materially underperformed the set of companies which are on the other side, which is low quality and low growth. So just to give you some numbers, in the last 1 year, low growth, low quality companies have actually outperformed high growth, high quality on an average by approximately 25%. And I'm talking about just the NSE 500 companies. So I think there is a huge potential tailwind from both the aspects, which one is the underlying intrinsic value of these companies is growing at a faster pace. And second is these companies have actually underperformed the overall market by a material proportion over the last 2-3 years, resulting in a reasonable valuation comfort in many of them.
Okay. The time that we are in, at least according to me, Vinay, this is unprecedented times because of the kind of flows that you're seeing in the domestic market, and any dip gets bought into very aggressively. So we haven't seen a major drawdown in a couple of years at the very least. You can go beyond that. The question that I have is that in a scheme like this, where you are forced to take allocation 50% in the broader markets, 25% at the broadest end, there is little room to hide when there is a widespread drawdown, which we haven't seen in a while. How do you protect yourself against that drawdown?
So I think when you are investing in equity, you have to first be ready to face a drawdown. There is no clear hiding place. If you are investing in equity, you have to ensure that you have to be ready to face a drawdown. Having said that, what we believe is that most of the market today is concentrated in low quality, low growth, or high quality and low growth segments of the market. So roughly almost a material portion of the market is concentrated in low growth segments of the market. And I think that is where the opportunity is. Most people are diversifying themselves by, let's say, large, mid, small. Some of them are diversifying by, let's say, strategies like contra or something like that. But most of them are not diversifying themselves by the core of the strategy, which is high growth and low growth. We think high growth has significantly underperformed in the last few years. This is a strategy which has delivered very strong returns over the previous 25 years, and hence we think that there is a great opportunity for investors to diversify their portfolios if they do not want to increase their equity allocations. I think PGIM Multicap offers a great opportunity to diversify their portfolio away from the existing theme which is prevalent in the market.
Okay. We've been playing out on screen the various trends that the scheme will likely focus on, and so I won't ask you about that. But what I will ask you about is what, in your opinion, the ideal holding period is for an investor getting into a scheme like this at the start, particularly in the context of what we've spoken about so far. And would it be something that you would say, if you go, so suppose you step into a room of investors and they say, are we going to get the kind of returns that we've gotten over the last 2 years? How would you respond to that question?
I would say you will not get those returns.
Okay.
Yeah, I think I will use your channel and this media as an opportunity to highlight that what we have seen in the last 3 years, I don't think so any investor should extrapolate that over the next 3 years. We need to remember, as you rightly highlighted in the start of the show, that there will be drawdowns. Drawdowns are pretty painful, and you should be ready to face drawdowns and not chicken out at that particular point of time and have a very long-term investment horizon, which means buy and hold and forget for at least 3-year period. So I think that's what we are looking at.
Fantastic. Thank you so much, Vinay, for expressing that thought and that view. And I'm sure that my viewers are going to benefit from it. Thank you so much for taking the time.
Thank you. It's been my pleasure, Alex. Thank you.